Hey everyone, Jordan here with Cover Call ETF Investing, and today we're going to be doing a breakdown on the T3, the recent T3 filing of HYLD specifically. Now we see Hamilton ETFs just released their entire slate of T3s for 2022 on all of their funds. But in this video, I want to specifically focus on HYLD. This is a fund I've been curious about covering for a while and waiting for this to come out. I don't know if it exactly came out today or maybe within the past week. Nonetheless, it's recent. So in this video, let's go over what exactly each of these columns mean for your taxable accounts, what you'll be paying. Just keep in mind, I am no tax expert. I just like talking about this kind of stuff. Do your own due diligence and definitely take what I have with a grain of salt, because in this video I'm all about speculating, questioning, and hoping that some of the insights that maybe I can bring to this video will help you out better understand future tax implications, whether it's for this year or next year. So with that being said, let's get into it. Oh, and by the way, any links that I have up here that I click on to help us understand the video, that'll all be in the description. Okay, that out of the way, let's get into it. Okay, so here with HYLD for 2022 T3 filings, we have eligible dividends. Now, eligible dividends, if we go over to taxtips.ca, looking at combined federal and BC tax brackets and tax rates. Okay, so for eligible dividends, we want to focus on this column, and we're just going to use, for easy math, look at if you made $100,000, well, you would be paying 15% on 3 cents. That's pretty easy. Okay, now one of the more curious spots I was looking forward to seeing was how capital gains would actually be broken down into this, because these are cover calls that are originating from the States, specifically from the Global X funds and the JP Morgan funds. So we don't have any capital gains, which makes sense. Like I said, any cover calls that originate in the States, those would be classified as foreign income, not capital gains. You can see with HDIV, which is the second most popular, I believe, cover call ETF that Hamilton offers, does include capital gains, which makes sense because this is the Canadian version of HYLD. And up here, cover calls that originate in Canada are classified as capital gains. Okay, so now that we got that out of the way, that makes sense. That's a big nothing burger right there. Okay, foreign income. So the bulk of our distribution that's been paid out has been in the form of foreign income. So if we go back over to our handy dandy taxtips.ca, we can look at other income, which would also be classified as foreign income. If you're making $100,000, you are going to be paying 38% on, what is that? 38% on the foreign income. Now we go over to foreign tax withheld. When dividends are paid out from a foreign source, like in the US, there is a 15% withholding tax at source when that is paid out. There is a foreign tax credit. So far, this was the best I can find. You're going to pay basically minus 25% is what I'm gathering here. This $1,000 isn't a limit. They're just saying if a taxpayer had to pay $1,000, they can claim 25%. Now we're getting into return of capital. Now the technical definition of return of capital is your principal investment getting returned to you. Okay, well, that doesn't sound all that great. We want our principal to be generating an income, especially through HYLD here. We don't want to see our capital coming back on it. That's an encroachment. That's what they would call grinding your principal down. Okay, so we don't want to see our principal return back to us, because the value of the fund actually decreases if that's the case. And for a fund to do that, I would say jeopardizes their reputation, and they could very well see a mass exodus of people not wanting to participate in these funds if they understand that it's continually losing value over time. This is a newer fund, so for now, time would be nice. A bit of history would be nice, but that's simply just not the case here. So a couple of T3s into the future, and we'll probably have a better idea. It'll be nice to compare in the next couple of years. I plan to be a long-term holder of HYLD. It's a main part of my strategy, but as we go forward, it will be interesting to see. Okay, back to return of capital. So we got through the technical definition, but what's actually going on is a loss or realized losses from the fund can be carried forward from last year, and in conjunction with losses that were realized in 2022. Losses in 2021, which is actually what I meant to say, is can be carried forward and they get reclassified. As far as I understand, you're not going to pay anything on this. It's just return of capital. This was already paid out. This is just negligible. So I'm just going to basically say next to nothing for this. So the real main portion of income that you're going to be paying out is, if you're making $100,000, is 38% on this amount. I hope you guys enjoyed that video. It might have sounded a little convoluted at times. Try to do my best to understand these taxes. I will probably produce some more videos like this to better understand the tax situations with cover calls. I really do enjoy reading and sharing this info with you all. It's a great interest of mine. So with that, we're gonna end the video there. If you haven't done so already, then please hit all the buttons of the like and subscribe variety, and I will see you all in the next video.